thing. Damn. All right. Guys, I am so sorry. Good morning, everyone. Happy Thursday. My apologies for the delay. Weather, we are in the middle of a hurricane, technically, here in Central Florida. I forget the name of the hurricane. I think it's a tropical storm or hurricane. So the actual computer reset. It's on a storm surge, surge protector, excuse me. So I don't know what happened. It rarely ever happens. Got to start over from scratch. I got to get Bloomberg up and running, all that good stuff. So let's kind of, make this as compressed as possible. It is 9:07 this morning, November 10th, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. Let's go ahead and get started on today's action. We had the CPI number come in today. I posted that on Instagram. That's a beat. So again, let's go over that number rather quickly, so at least we have some kind of uh, understanding. Here we go. Oops, man, it just does not make it easy today on me when it comes to getting this stuff done. Let's see if I can get TweetDeck up and going. Okay, now I can't get TweetDeck going. God, let's go to desktop. There you go, because I made it smaller. So that's always fun. Let's go and expand this. We'll get this over to the left side. We'll go to page one. Granted, I do have three monitors, so I tend to look left to right, and then I have my S&P futures on my right side, which I'm always staring at. So my apologies. I'm usually ready for the morning note right at around 8:20, 8:30. So there you go. Core CPI number month over month. This strips out auto and gas 0.3% versus a 0.5% estimate. CPI for October came in at 7.7 year over year, below expectations of 7.9%. That is really great news. And this is why the market is going higher. So at least we got that information. I went ahead and set the Reuters report to our blog on Discord. Discord members, please go ahead and take a look at that if you guys are interested in reading a little more of a deep dive into the CPI number. Okay. Dow futures are up 753 points. Nasdaq up 456. S&P up 115. We talked about this on the blog yesterday on Discord. Let me go and open it so I can show you some things that we sent out. Let me go ahead and get back in because I went ahead and reset. Dow 764, Nasdaq up 4.26%, S&P up 3.18%, Russell up 3.5%. Crude oil, its worst week since I believe, I forget the exact date. Let me get the exact date of when was the last time that crude had this much of a fall. Let's see, likes. It is down for its worst week since August. So that's crude oil. And remember, guys, I love energy stocks. Again, I have it in the dividend portfolio. It's been doing great. I have been long Chevron before. I've been long XOM before, XOP in 2021. We did that a couple of times. So again, we're energy bulls. We like it. But again, guys, you get too hot too fast. It happens sometimes, right? Just like earlier in the year when you had that big spike to 130, now you're back to that line that we had in the sand around 86. If we can get to around 80, I think that's probably a good spot to go ahead and take a look at possibly buying some energy names. The problem is that energy has decoupled from oil. So again, it's kind of tough to kind of track it by oil. But again, if we go ahead and bring up, just say Chevron on the hourly, you could see that it is down from its relative highs this morning of around 184, now around 181 and a quarter. I would like to see it down at least in the 170s. 160s would be great. I don't know if we'll get there anytime soon as we got better than expected CPI numbers. Gasoline futures up 1.30%. The reason that is that the dollar is finally falling. This is why stocks are going higher. Now we don't have high inflation expectations. We expect the Fed now not to do 75 basis points in December. The talk is now 50. That is not pivoting, but that's less raising. So again, I guess we're getting the news that we wanted to get from Powell last week. So where does that leave us? Let's go to the dollar. Obviously, yesterday, what you had was positioning for CPI, panic from the FTX crypto thing. Crypto took a dive, as we know. Bitcoin took a dive. Let's go ahead and take a look at the dollar. As the dollar falls, Bitcoin is priced in dollars, so is crypto. That's why futures on crypto right now is 16,680, up 6.82%. Ethereum 1197. If you need the money today on crypto, let me make this very clear to everyone on this video. You should be selling into this if you are afraid, because by next week you might get to 10,000. You don't know. And again, look, Bitcoin is only up because the dollar is down. Nothing else. That's really just it. So again, guys, this is an opportunity right now when the market's bouncing and you had some stocks that you were not sure about, that you were a little nervous about. You can't sleep at night. I don't know why I'm holding this crypto, whatever. You need to sell today. First thing in the morning, get rid of it. You will sleep better at night. I've been there. It's fine. For those who are more long-term holders, this right here, we talked about the bottom, right? We talked about the S&P bottom. Look at the dollar now. Again, all we're doing is retesting that trend line. Until we actually break that, let's not get too excited. Why not? Why do I say not too excited? Because we have 3,900 as our level there, as basically a retrace from Powell on Wednesday, on Tuesday. Was it last Wednesday? Was it last Wednesday? Yes. So with that being said, 3,900. If you're looking to buy some puts, that's probably the level you're looking at. Put a 39.28 stop. That's the resistance, right? 38.83. If we break above 3,900, that's a good sign. But we can always reject as well. A lot of people yesterday, guys, were buying puts. A lot of people were short the market. That's the only reason we're igniting higher. And why do I say that? Let's go ahead and go over the Discord channel quickly, where we explained it on the, let's see here. Let's see here. I think I had it here. Okay. So we just had the midterm election, mind you. And I talked about this yesterday at 2:40 p.m. Like I said, looking at the put call ratios, obviously with markets down, this was yesterday, puts being bought up. But it seemed that put protection was bought heavy ahead of the election, the midterm election last night. So again, we did have a spike in actual downside protection due to the midterm elections. They obviously paid out because the market tanked after the midterm elections, which was yesterday. And I said, listen, all this is pretty meaningless in terms of general direction to be expected tomorrow. Again, it was a binary event, CPI, but it could give us a hint of the ferocity of the move. And again, that was what I was really, really wanting to really put emphasis on, guys. So again, I said, put skew higher means that if we were to get a good CPI number, like we just had, the squeeze higher would be stronger rather than a flat number, or markets could be just choppy to kill premiums out there if we would have met expectations or, being a little higher. Put prices are already expensive. Calls are now cheaper, is what this chart is telling us. This was yesterday at 2:40 p.m. I know there was a lot of members out there like, why didn't we short? Why didn't we join in the shorts? We had to wait for this binary event. Now we got the info. Now we could start making some analysis. So again, if you have puts overnight, you're probably taking a hit this morning. But again, it was downside protection. Your portfolio may be nice and green. But again, look at the Dow up 811 points, guys. Everyone was off sides. That's really it. Everyone was off sides. And it's important to understand, to know, anyone could see a chart, as we know. Anyone can talk about it, look at the actual setups. Listen, you can grab a book and look at all the technical analysis all you want. But what makes a difference between a trader who can do this forever, and I've been doing this since 2014, I basically have witnessed a correction or bear market every 2 years at this point. So 2024 is going to get a little ugly at this pace. Guys, it's important to know why things happen. It's important to know the macro. It's important to know call put ratios. Where is the market going? Gammas, the dealers, the books, the CTAs. It's all important if you plan to be a trader. If you plan to be a long-term investor, none of this in terms of small market movement makes a difference today. Your 401k is going to be nice and green this morning. That's nice, but it hasn't been that great lately. Are we at a bottom? That's the big one everyone's going to say. And again, I've been saying that we hit a bottom since 3,500, 3,600, 3,600 being the 200 MA on the weekly, 3,500 being the wick low. And again, guys, we know where we want to go. We know exactly what we're expecting. 3,900 should reject today, I expect. So don't run in this morning out the gate and start buying calls just yet. Go ahead and wait a little bit. If you missed the bump up this morning, that's okay. 39.06 is a full retracement of the Powell drop. Get to 39.28. That's the highs of last week. Break that, then we can talk. Now let's go ahead and talk about some upside possible moves. We break 39.28. Let's just say we get there. Really, you have no moving averages, at least on the daily. I have the 4 hour chart. My apologies. Let's bring up the hourly. Alameda research is winding down trading. FTX CEO tweets. So there you go. We do have the 100-day moving average on the daily right at 39.09. That is right the exact place as the retracement level of Powell's move, FOMC. So let's break that first. That might just reject today. It doesn't mean, hey, we won't be higher, but it might reject and get a little choppy. So let's not just burn premiums running in and buying everything. But if we can break above 39.06, there is no more moving averages. 39.80 is our next stop. That's our next level that we're looking for. We'd probably buy calls up to there. And then we go slowly and surely. 40.85 is your 200-day moving average. That's big resistance, but that's a nice pocket between 39.80 to 40.84. We're in a seasonally strong month, November. November tends to be very strong. How's this? After every single midterm election, regardless of who won, who lost, whoever, this is from CNBC yesterday. Every single midterm election, the 8 months after that, the stock market was higher 100% of the time. Now, again, not perfect high, not 10% high, but it's always green 8 months after a midterm election. That's something to say. That helps the bottom case. Now we have lower rates, or we have rates coming down. We have, in terms of inflation, auto sales, in terms of used cars, really rolled over. Apparel really rolled over. Prepare for a very nice Black Friday on markdowns across the board in terms of apparel and electronics, because now you're getting into a deflationary environment. That's just the fact. And then what happens, when you have lower yields? You got to chase yields, right? Capital needs to flow somewhere. We talked about this on the newsletter. We talked about this on the blog. We talked about this on the YouTube. It is no different. So, do I feel a little better today in terms of our bottom call? Yeah, I feel pretty good. The work still needs to be done. Nothing has changed. All we can do is all we can do. We're going to wait for our alerts. VIX is back on this nice trend line channel. 23.59 is the lows. We're near the lows of that. The dollar we already took a look at. Let's take a look at the 10-year yields. I'll expand it for you, and then we'll answer some questions as I'm running out of time this morning. 39.14 was my support on TNX. That's a 10-year treasury yield. We're below 40 now. So again, if we can break below that, then we can start igniting to the downside as we have another gap to fill at 36.57 on the 10-year yield. That would be good for risk assets and good for stocks. Again, none of this is very surprising coming in November. It's just been that way. December isn't perfect because if you remember 2018 December, we had that big fall due to the Fed. So again, that can skew seasonality as well. Whew, that was a lot. Let's answer some questions. What happens when we break 3,900, which is the previous high in the 100 MA and the daily? After that, we talked about it. I apologize. Let's go ahead and take a look here. Above 39.06, we talked about 39.23, 39.80, which is get us back to the peak back in September. That's basically the second highest peak of September where we started rolling over. That's the next resistance I have. 39.80 is a stone's throw away from 4,000. That's big number, big level, at least in terms of round number theory, right? But again, we're still looking for really that 200-day MA on the daily. That's really what we're looking for. And that's right now at 4,084. It was at 4,200. We still have a nice trend line down to 4150. Once you break 4150 in that trend line, that's where it gets really interesting and we start cooking, guys. So I think I'm confident to say that if you are here, if you are trading and you are someone that has been doing this for a little bit and have been surviving, allocating correctly, being smart, reading the tape, your patience is about to be rewarded. And I don't say that lightly. I don't like saying things that are to catch headlines or to, get someone emotional. Yeah, let me go ahead and tell them that the worst is going to happen. I don't believe in that clickbait stuff. What I can tell you is that, again, I do think that the worst is over. I really do. That CPI number was big. It was very, very important. Granted, next month we have another one and back to the cycle. But again, I think we're heading to the right place. I'm confident in that bottom call. Should you go out and run out and buy stocks today? Absolutely not. Why would you go buy stocks on a green day, especially a big green day? You're going to go buy NASDAQ today up 4.5%. Again, just wait a little bit. You're not going to get a green shoot to 4,500 tomorrow. No. Take it easy, but at least understand You still have your shopping list if you're looking to buy stocks. You're still looking at the macro, but again, in terms of what we are used to in 2022. I believe that is done with. At least the bottom is in for 2022. That I can say very confidently. I don't think we'll get back down to 3,500 by the end of the year. It just won't happen. Maybe next year, if it's a really, really bad out there, obviously with layoffs. Again, I don't hope for it, but it can. We deal in probability, guys, not certainty. It's all probability. How do you determine the strength of the move upside or downside? Very simple. You can go ahead and take a look at two factors. One, you could always take a look at something that's very high beta, like NASDAQ. Again, it moves a lot more or less in terms of the S&P. So again, those names are the ones that move. And of course, small caps being high beta as well. That indicates ferocity of the move. 4.6% on a NASDAQ green day doesn't really happen often and usually only happens in bear markets. And rest assured, we're still in a bear market, granted. But again, these kind of moves do happen. I just think the bottom is in. Again, we've been kind of waiting for this moment where CPI and the info actually comes out where we expect it to the downside. Guys, CPI has been falling really since summer. We peaked in June. We're just not hitting expectations. And that's the market for you. And that's really just life in general, perspective and expectations. You can't get let down if you don't have expectations, right? So again, if you have some, make sure they're manageable. I don't expect us to go up 2,000 points from the Dow today. See, that's an expectation that doesn't make sense personally. My apologies, guys, again for being late for the rain. The rain has somewhat subsided. Who knows? Again, guys, let's not get too excited. It's nice. Don't get me wrong, but 3,900 could reject. Just keep that in mind. I don't have an issue with you guys taking your profits, enjoying, but again, be careful out there. Again, this is a short squeeze. A lot of people, many people were under puts. They were buying contracts, puts, and this is just what a short squeeze looks like. Just gets nasty to the upside, just like it gets nasty to the downside, except when it's nasty to the upside and you have stocks, it's a nice day. Have a great rest of your morning, guys. I will see you guys tomorrow for the morning note, 9 a.m. Eastern Standard Time. Would love to have you guys on board with the team. Maybe this is the bottom. Maybe we do get a rally. We'd love to have you on board for Masterclass. Black Friday sale is in. I hate to talk about this stuff on YouTube, but it's important because I'd love to have you on the team. If you like the Discord, check us out. GAR Capital on Instagram. We are now verified on Twitter. It's $8 a month. I had Twitter Blue before that because the ads were just annoying. Just like I paid for YouTube Premium and all that stuff. I'm into it. So we have a little check mark. The one on Twitter, GAR Capital with a little check mark. That's us at GAR Capital. A few words about Path. Sure, let's go ahead and answer it quick, Alex. I just don't want the bell to ring and then, I'm missing out with the team. UiPath, I don't know much about them. Pretty ugly out there, but I assume they're having a nice day this morning. You have 1171, 200 MA on the daily. If you're looking for a lotto tick, I don't know much about them, but again, if you own the stock and you want to get out of it, here's the time to do so. If you are looking to buy, you're not doing it here. You're waiting to see if maybe you can get above 13, if that's the case. Unless you're trying to trade it, then you get above 1171 and you can get up to 13 if that's the case. There is one gap to fill at 1238, so that could be a good target. I don't know their volume, Alex, so I'd be a little wary on this one. There's a lot of names out there that have wacky spreads. I kind of just stick with the mega caps and I stick with the indices. Again, I can always sell my contract when I need to. I still have AMD calls, mind you, with the team. And we were ugly yesterday, but now we're coming higher, which is nice. Premiums maybe taking a hit, obviously, Feta and all, but it is Thursday morning. Let's see what we get from it. I have the AMD 66 calls. If we can get to 65, maybe I can salvage and break even. I'll take that as a W if that's the case. So with that being said, guys, Masterclass deal is going to be all month for Black Friday. It's going to be 40% off. We'd love to have you on board. Join us if we do have this rally. Love to explain it to you. The newsletter will have a little more detail on the CPI number from the team, guys. Have a good one, guys. I love the fact that you guys are here every day. Your patience is going to pay off soon. We're going to kill it. Love you guys. See you guys later. Cheers. There you go.